Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 7th, 2025, we're putting Microsoft, MSFT, under the microscope, combining the latest news with a detailed look at its price action across multiple timeframes. First, let's consider the recent buzz around Microsoft from our news sources and Google searches. Multiple reports consistently highlight Microsoft's robust profitability and its formidable strength in securing corporate technology spending, especially with its new Fabric data platform gaining traction as the fastest growing in its category. Yahoo Finance recently cited a highly ambitious $650 price target for Microsoft, painting a very optimistic long-term picture and suggesting significant upside potential for the stock's future performance. However, other headlines, like one from the Motley Fool, advise caution, suggesting that the stock is getting expensive, prompting valid questions among investors about potential overvaluation after its strong recent rally. This creates a mixed sentiment, with strong long-term bullish catalysts contrasted by short-term, expensive concerns, which we will thoroughly reconcile with the raw chart data to gain a complete understanding. Now, let's turn our attention to the charts to see how these narratives translate into actual price movements and identify key trading opportunities. Looking at the daily chart, spanning from March 2024 to the present, we observe a clear overarching uptrend in MSFT's price action, characterized by a consistent pattern of higher highs and higher lows. The stock has delivered significant and consistent gains over the past year, clearly reflecting its dominant market position, continued innovation in areas like AI, and robust underlying fundamental health. This sustained upward trajectory indicates strong underlying investor confidence and persistent demand for Microsoft's diverse products and services across various sectors. Initial long-term support for this trend appears to be around the $380 level, which provided a strong base for a powerful rebound in early 2025, acting as a historical pivot point. As the price has moved higher, prior resistance levels have often converted into new support zones, demonstrating the market's acceptance of successively higher valuations. Conversely, we've seen significant resistance forming as the price approached and surpassed prior peaks, most recently testing new all-time highs before a notable pullback. Now, let's zoom in on a crucial and highly impactful period from late July to early August 2025 on the daily chart, specifically around Microsoft's Q4 earnings release. The candle on July 31st, 2025, reveals a dramatic gap down and a significant 3.91% decline, opening around $555 and closing sharply lower at $533.5. This massive single-day price action, accompanied by exceptionally high trading volume of over 51 million shares, is a direct and undeniable correlation to the Q4 earnings news we previously discussed, indicating a strong negative market reaction. This event has instantly created a strong overhead resistance zone in the $550 to $555 range, which will now be a critical hurdle for any future bullish attempts to regain lost ground. Following this sharp earnings-induced decline, the price attempted a modest rebound on August 4th, pushing to highs around $538, but subsequently retreated over the next two trading days. The price action on August 5th and 6th indicates persistent selling pressure and a lack of strong buying conviction at these slightly higher levels, resulting in a close of $524.94 on August 6th. This suggests the market is still actively digesting the earnings report's implications, and immediate support seems to be forming tentatively around the $520 to $524 range, serving as a new short-term base after the initial shock and creating a new immediate trading channel. Switching to the 1-hour chart, we gain a much clearer, granular perspective on the intense intraday volatility surrounding that late July earnings period. Here, we can distinctly see the massive downward move that occurred immediately after the daily candle open on July 31st, originating from an open near $555 and quickly breaking down. This hourly view vividly illustrates the rapid and sustained selling pressure that quickly pushed the price down by over $20 within a few hours, forming a clear short-term resistance at the $550 to $555 zone. Subsequent hourly candles reveal persistent attempts by buyers to step in, particularly as the price approached the $520 to $525 level, often forming small bullish reversals or dojis, indicating temporary indecision. These intraday bounces, however, were consistently met with renewed selling pressure at higher levels, preventing a sustained recovery above $530 for much of the first few days of August. The one-hour chart clearly highlights the consolidation phase the stock entered, as it struggled to find a solid footing after the sharp post-earnings sell-off, marked by a pattern of lower highs and lower lows in the immediate aftermath. For active traders, these hourly candles reveal prime opportunities for shorting resistance near $530 or initiating long positions at temporary support near $520 within this new, lower trading range. Volume analysis on this time frame can provide additional confirmation, with higher volume on selling spikes suggesting stronger bearish conviction for the short term. Now, let's broaden our view on the one-hour chart to analyze the recent price action from August 4th to August 6th, 2025, which constitutes the most recent full trading days in our dataset. After the initial earnings volatility, Microsoft has settled into a narrower, more defined trading range, primarily oscillating between approximately $524 and $538, signaling a period of market reevaluation. We can observe several short-term reversals within this band, where prices briefly tested higher levels before pulling back, creating a visible pattern of lower highs that indicates continued seller dominance. This current hourly trend suggests a slight bearish bias in the very short term, with sellers consistently maintaining control at the upper end of this consolidation range, thereby preventing significant upward momentum. Volume spikes, particularly on some of the downward hourly candles, indicate that selling pressure remains significant when the price attempts to rally, suggesting heightened caution for long entries. Traders should closely watch the $524 level as critical short-term support. A sustained break below it on higher volume could signal further declines towards the psychological $520 mark and potentially the $490 long-term support. Conversely, a decisive move above $530 on strong buying volume would indicate a potential short-term bullish reversal and a retest of the $538 resistance, shifting momentum. This current range-bound behavior offers distinct opportunities for both long and short positions, contingent on a clear breakout or breakdown from these established levels, accompanied by confirming volume to validate the move. To gain the most granular view of immediate price action, let's switch to the 15-minute chart, focusing intently on the last 48 hours of trading on August 5th and 6th, illustrating the ongoing battle between buyers and sellers in real time. Here, the intraday volatility is immediately apparent, with prices oscillating frequently between $524 and $538, showcasing the rapid shifts in supply and demand that define short-term trading. We observe numerous small, short-lived rallies followed by sharper pullbacks, particularly evident during the latter part of the trading day on August 6th, which concluded slightly below its open, despite some initial morning strength. The accompanying volume on these smaller timeframes helps us identify moments of increased activity, often coinciding with brief upward pushes or sudden sell-offs, which can be interpreted as institutional presence or significant order flow. Notice how the price found temporary, yet reliable, support around $524 to $525 late on August 6th, preventing a deeper fall and confirming this as a significant intraday support level for the current session. For day traders, monitoring these 15-minute candles is absolutely crucial for identifying precise entry and exit points, especially around the immediate micro-support and resistance levels of $524 and $526, using tight stop losses to manage risk effectively. The conflicting news reports about trading up today could have reflected initial optimism in the very early hours or pre-market, which quickly reversed as the regular trading session unfolded, a common occurrence with earnings reactions. The last few 15-minute candles on August 6th show Microsoft closing near its low for that day, signaling persistent short-term bearish pressure heading into the current trading session on August 7th. Despite the overall long-term bullish outlook for the company. Returning to our daily chart for a final comprehensive recap and future outlook, it's clear Microsoft is at a pivotal point following its FQ4 earnings, balancing formidable long-term potential with recent price headwinds. For the long term, reasons to be bullish remain exceptionally strong. The ambitious $650 price target cited by analysts, continued innovation in high-growth areas like the Fabric data platform and AI, and Microsoft's consistent profitability and global market dominance. A sustained and convincing break above the post-earnings resistance at $535, followed by a clear move above the $550 mark, would strongly reinforce this bullish sentiment, with a high likelihood, around 65%, of reaching new all-time highs. This optimistic scenario is primarily contingent on continued positive sentiment towards tech stocks, strong overall market performance, and any further groundbreaking announcements from Microsoft in the highly competitive AI space. However, reasons to be bearish in the short term include the persistent downward pressure observed since the earnings report, indicating a possible sentiment shift or significant profit-taking after a prolonged rally, which is a natural market correction. A decisive break and sustained close below the $520 support level, which tentatively formed after the recent drop, would signal further short-term weakness and could trigger additional selling. This could potentially send the stock to retest the psychological $500 level or even lower towards the robust $490 long-term support, a scenario with a moderate likelihood, around 35%. If negative macroeconomic news emerges or the general market experiences a broader downturn. Traders must meticulously monitor volume alongside price action for clear confirmation of any trend continuation or reversal patterns, as significant volume often validates the authenticity of a price move and reduces false signals. Additionally, actively look for upcoming news regarding Microsoft's next quarterly earnings, any analyst upgrades or downgrades, or major product announcements, particularly in the highly watched artificial intelligence sector, as these will serve as significant catalysts for future price direction. In summary, key price levels to closely watch are the immediate support at $520, critical short-term resistance levels at $535 and $550, and the ambitious long-term target of $650. Your trading decisions should be meticulously based on how price reacts around these levels, rigorously considering both the powerful underlying long-term bullish catalysts and the prevailing short-term bearish pressures to manage risk effectively and maximize potential gains. Thank you for joining us on Explain the Charts, and we look forward to bringing you more in-depth analyses soon.